Good morning, traders. Today is August 2nd. This is Brad Matheny. This is a weekly SPY chart. Looks a little cleaner here on a weekly chart than my daily chart, but nonetheless, let's take a look here at this data and really try to understand what is taking place here. We're seeing huge selling overseas in Japan and Germany. Pretty much yesterday was across the board, but we're still holding up off of this low. And it still is, in my opinion, a pullback in an upward trend. We do not have any real indication of a breakdown in the US markets yet. I checked all the data yesterday that I used to try to gauge the underlying fundamentals of the market. And yeah, we're seeing a pullback. Seeing a pretty deep pullback take place. And I think this is an unwinding phase, as you can see, like we had back over here in August, or sorry, in April. But again, this low is very important. You can see here that we've got a scenario here taking place with this low. And let's come in here to check that just to make sure. Low price is 537. Yep, 45. So we've got this red line low right down here as kind of our safety mechanism. 537.45. Last week's low price level would be a very strong indicator that if we got below that, yeah, we'd be under some real downward pressure right now. The SPY cycle pattern for today is a breakaway in bearish trending with a carryover trend. So our base rally and our bottom rally start pretty much almost all week long, except for this flat down pattern, has been disrupted by news. It's really a foreign market affair right now, a real meltdown in the foreign markets. And again, you can see here, I mean, you can see how this Japanese move, this is weekly. This is weekly, folks. And you can see how this move in Japan is just crushing the markets right now. And I would imagine the Hang Seng Index, make sure I got it. Hang Seng Index, HSI. This is weekly as well. Continued downward trending. Let's take a look at the KLSE, which is the Kuala Lumpur Stock Exchange. Holding up okay. Let's take a look at the FTSE. Holding up okay. And again, this is weekly. So what you're really seeing here is, you know, pretty much the German bond, the DAX, sorry, collapsing over the last couple of weeks. The Japanese yen collapsing over the last couple of weeks. Bitcoin has collapsed downward back into this 62 level. I still think we have a ways to go down into this lower reconfirming 62,000 area. But we are moving into this sideways flagging formation. And what's happening now is we're getting a big unwinding in the NASDAQ and we're getting a big unwinding in the SPY. So what's happening with this unwinding is I think that we've reached a kind of an apex. I think we've reached a pretty strong downward trending force, a pullback of from these highs, from roughly the rejection point down here, 3.5% to 4.5%. I mean, in theory, we could come down here 5.5% down into these middle levels here in this 530 area before we try to find support. But, you know, the reality here is, folks, this is just one of those news events. I mean, we've had, you know, election issues in Venezuela. We've had attacks on Israel. We've had attacks on Lebanon. We've had the start of the Paris Olympics. We've had the Kamala shift, all taking place in the last 9, 10 days. And, this is really playing out as a bit of a disruption in the market. So my carryover pattern, given what's going on today, I wouldn't be paying too much attention to this breakaway in carryover trend mode. Next week we have an up, down, up, a top resistance, flat down, harami inside breakaway. Then we have a gap breakaway, rally, carryover, inside breakaway. How do I interpret this? I'm interpreting this as finding support in this area, inside breakaway, and then I'm looking here as a gap, breakaway, rally, and carryover trending, and then a carryover and inside breakaway. So again, I'm looking at this as trying to find support, maybe building a base and trying to rally out of support. That's how I'm looking at it. But I'm looking at this move, this real pullback, as a how should I say it? A series of events driving this pullback. I mean, I'm really seeing this as a very unusual market activity. I mean, like I told you guys, this is what I mentioned to you earlier, and I'll just state it again as I make it a little bigger. Normal volatility is somewhere between 1/4% and really 1%. That's what I call somewhat normal. Okay. 1% has gotten to the point now where the last 4 or 5 years, 1% is fairly normal. Small would be, 1/4 to 1/2%. To me, that would be fairly small. Relatively large day would be, 1.2 to 1.5, 1.6%. Very large day would be, 1.4 to 1.8, 1.9%. That's a very large day. When we're getting moves that are 3%, like we saw in the NASDAQ the other day, 5% in the Japanese yen, we're getting massive moves. These are not, this is an outlier move. This is a huge trend in the markets that reflects something cataclysmic type of taking effect, an outside force driving the US markets into this trend, not some, there's been no real crisis in the US. In fact, the data is going to continue to come in fairly strong. So we come in here, we come to economic calendar. We're going to look at the data this week, so you take a look at the data this week. Our US data, Red Book came in at 4.5, a little weaker. Home price index came in a little weaker. Jolt's job openings came in a little weaker. Consumer confidence came in a little stronger. And again, this is just data. This gets adjusted sometimes, but we come down here to Wednesday, which was 2 days ago. Mortgage rate 6.82, no change. Mortgage applications minus 3.9, not horrible. Mortgage refinance index 5.7. Yeah, we knew that. Housing market is not super strong right now. Non-farm employment change 122. Here's a new report. DOJ slips on report of antitrust probe. Employment costs. Let's see. Employment. Chicago PMI 45 versus 47, weaker. Pending home sales up a bit. Like I said, the data is not horrible. And again, nothing. FOMC statement, gasoline inventories, press conference. Yesterday, what did we have? We had continuing jobless claims came in within reason. Non-farm productivity 2.3. Global manufacturing PMI came in a little weaker. ISM manufacturing number came in a little bit stronger. And of course, then we have today's data. We have jobs data coming out, hourly earnings, government payrolls. This could be very interesting. But what I'm trying to share with you is that I don't see any real reason for cataclysmic shift other than foreign events and what I call the Kamala shift. So if we come back in here for daily, the pattern is a breakaway pattern. You can see here in carryover mode, I really do believe we're going to see, continued pressure, but I really do believe that this market is reacting. And because of the way it is reacting, I would not be surprised right now to see some sort of an upward shift take place today, possibly a big move, possibly some kind of a recovery phase. As you can see, we come down hard, recovered, come down hard, big gap up, come down hard, possibly another big move, maybe up into the 450 or 550 to 552 area. But at this point, it's going to have to really depend on what the markets are doing, what kind of news we get, see if there's any massive conflict between Iran and Israel, or Lebanon and Israel. I mean, it really is all hands on deck. Let's see what the heck's happening, and let's try to stay away from cataclysmic types of price trends. So, if I were to bet again, what I think is going to happen today, I think we're going to find some support. I'll go back down here to 10-minute, go like this, get rid of that, scale. And you can already see the SPY as of the end of the day. Now, granted, we're a little weaker this morning, so don't rely on this upward trend that we saw already. So, if I were to kind of guess as to what's happening, we're looking at a 536 opening price right down here at critical support. Okay. And if I were to guess as to what would be to happen, I would say that we would open somewhere in this area. We would shuffle around this support and maybe meander a little bit higher, maybe back up into the 546, 547, maybe 550. And that would be my guess based on the patterns and the fact that the actual data related to the US is not collapsing. We are just not collapsing. This is a foreign market crisis, as I mentioned to you earlier. And when you get right down to it, the US is rather immune to these foreign market crises. If Asia or Japan starts to run into some crisis mode, or if Uzbekistan or whatever starts running into some crisis, that's like essentially that's a nickel compared to $1 million. It's not massive, and it's not going to destroy the US economy or the function of the US economy. It would take a global crisis event to do so. So I think the real crisis here is a crisis in confidence. Someone wrote me and said, "Well, couldn't we have a panic cause this?" Yeah, I mean, we could have a bit of a panic that causes people to say, "Hey, we have this crisis of confidence. We don't know what's going on. The techs are falling. The techs have been leading everything." But to go from this type of a trend into this big breakdown, collapse, huge breakdown as soon as Kamala Harris is approved for the nomination. This is literally the day it happened. It happened late that day and then broke down here. And since then, we have been struggling to break away from this with huge gaps. I mean, this is essentially a 1.5% gap or more right here. And we're rebounding down off of this level, starting down here right at this critical opening low. I think that we're going to find that this is going to wash out today and maybe early next week into this mode here of support, and then try to meander ourselves out of it. I still believe that we're moving into a vortex rally, and I still believe that we're going to trend higher. So let's take a look at gold. Sorry, I got the sniffles a bit this morning. Gold is trending higher, 2503, rolled down off of this high. As I mentioned to you, I think we're going to continue to trade, but after this reaching this peak and inside this channel, I really do believe that gold it's going to suffer a bit of a pullback down into this 2470, 2480 area. So be prepared. I think that gold is going to really roll downward. And I think it is just a natural pullback. Let's take a look at the QQQ. Opening at 5160, 451.60. Very deep pullback, looking to hold support here. We're already below support, so we could get kind of a bounce mode here. We'll see how that plays, but at this level, we're already below very key support. We'll see how it plays out. Bitcoin has already reached a high price up here, 70,000, 69,000, has come down and hit my 62,000 level. And you remember I talked about how this would likely try to find some sort of a base around this level here. Given what's going on with Bitcoin, I suggest it's going to try to roll into my basing area. And it could be kind of an extended roll into the basing area before it tries to move higher. So I would really be looking for Bitcoin to find a base around the 6th, 7th, or 8th, maybe at the earliest. Okay, let's check to IWM for those who follow the mid cap. Fairly big breakdown, really holding up fairly strong. You can see here from these rejection points up to roughly here. We're in that 382 to 50 area for support. Mid caps and transportations would really be key. As I mentioned to you, I think these are the next big movers. The mid cap, small cap, and innovation sector. I think that's where capital is going to be rushing. And I think this is really a big capital shift right now. I think, and this is my opinion, so you can fault me or whatever. We'll find out if I'm right or wrong. But I think Kamala Harris really disrupted the market. I mean, I can point to the fact here. Look at this SPY chart. Wait for it to load. And so we come in here. Everything's fine. No problem. Biden's going off right across here. Everything's fine. Biden's going off. Oh, he's got COVID. Don't worry. He's still in the race. Friday. Okay, no worries. Monday. Oh, Biden's dropped out. He's now out of it. Kamala's going to come into it. What? Okay, so we come down over here and we go through a bit of a pullback and we don't know what's going on. It's put pressure. And so all of a sudden, boom, Kamala gets nominated. Crush. Just massive crush takes place as soon as Kamala gets nominated. And I'm going off of memory here, so it could have been right here that it took place. Kamala gets nominated. We have a little bit of recovery, and then we get this big, massive breakdown within 2 days, 3 days of Kamala getting nominated. What the heck is this about? In my opinion, this is uncertainty. This is real global fear. They don't know. They knew what they were getting with Biden. They don't know what they're getting with Kamala. And I think that's really kind of what's playing out here. And I think the overall scenario is literally crisis. We don't know what we're getting, folks. We don't know what the U.S. is in for. We don't know how it's going to play out. We just don't know. And that's the bottom line. We just don't know. So that's where this crisis mode is coming from. It's coming from a standpoint of the U.S., the global leader, the global economy, and it comes down to, a lot of it comes down to, yeah, the U.S. does drive the global market. Yeah, the U.S. does extend resources out to banks and other individuals uh, continually. The Fed does. The U.S. markets drive global economy. And if we move into a scenario where we are shifting gears or shifting from fourth down to first, hypothetically, meaning really changing our scope of participation because of whatever reason, because of a new president, because of changing policies, because of whatever, you can get this type of effect. This is a 3.5% pullback in the markets. Nothing massive in the long scope of things, but it can be enough to really disrupt market trends. And what's evident about this is all these major gaps. These major gaps are huge and really quite concerning to me that this is a very unusual market trend. This is a disruption to the norm. I think it's going to settle out maybe by next week. But let's just get through today and try to stick with what our plans are. Now, again, my other systems are rolling with market trend. These are overnight sessions. So you see we're in bearish trending, building support. We're in bearish trending, building support. You can see the green. We started to build some support. We're in bearish trending, no real support yet. So we have the opportunity still to try to recover from this. But the pattern says a breakaway and carryover. And I suspect we're going to try to find support and rally out of it. But if we cannot find support around this level, if we cannot find support above 538, roughly this level, before early trading today and markets stay under pressure, be prepared. 532 is next. So if we can find support and rally above 538, I think we have a good chance of moving higher. If we can't, then 532 is next on the downside. Okay, guys, talk to you later.